What's going on, traders? We got a lot to talk about. We're going to talk about the SPY, triple Qs, VIX, and of course, we're going to go over Nvidia and what institutions are doing for the upcoming trading week. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now, we're looking at the triple Qs weekly time frame, and it's really interesting where we are on the triple Qs. And what I mean by that is that we're below not only the weekly 50 SMA, but we also are below this trend right here. So let's map it out for you guys to see. And so we're below this trend, right? We bounced here, we bounced here, we bounced here, and we currently are breaking below this trend. Now, I will say this much. This break is not really convincing. And the reason why I say that is typically when you see a break of structure or, a break of a key level, you want to see a convincing candle or at least convincing volume depending on what type of trader you are. And this isn't really convincing, right? Dojis are never convincing. That just shows that the market is uncertain on whether it wants to head further down or head back towards the upside. So I really wouldn't trust this move right now until we get some further confirmation. Now, if you're wondering why I'm looking at the weekly time frame, I always do this at the end of every week, and I encourage you to do the same. At the end of every week, look at the weekly time frame. It gives you a better idea on what could happen for the next upcoming trading week, if not the next upcoming trading weeks. And also look at the monthly time frame at the end of every month. That's just something I do. Do what works for you. Now, what's important to note here is that, again, we're below this weekly trend. We're below the 50 SMA. We got like double resistance, but we're also somewhat below supply and demand, right? So right here between 479.36, which is a dark pool level, and 486, 487 more or less, you have a supply and demand zone. Now, if we go to the 4-hour time frame here, there are some good signs on the much smaller time frames. You have a 50 SMA where you're breaking above the 50 SMA. You have a bullish engulfing candle on the 4-hour time frame. But not only that, but you broke back within the supply and demand zone as well. So there are some somewhat bullish signs on the much smaller time frames. Now, if we are going to head higher, I do imagine that we're going to attempt, keyword is attempt, to fill this gap at around 490 on the triple Qs. Now, one thing I wouldn't be surprised that happens, right? Because we know that gaps have very strong support and resistance. You attempt, right? You'll make an attempt towards this gap fill at around 490 and it doesn't get filled and you just reject from there. We see this happen all the time when it comes to gaps, right? I'm not saying that's going to happen. I'm just saying I wouldn't be surprised that does happen. Now, I see a lot of traders are, going back and forth on whether this is a bear flag or not. And I don't think either side is wrong. Me personally, I'm leaning more so on the side that this is a bear flag. Surprise, surprise, right? Bear flag, falling wedge, rising wedge, I should say. Either way, this looks very bearish, right? So again, this is why I say I wouldn't be surprised we act like we're going to fill this gap at around 490 and then for whatever reason you just get rug pulled here. So very much possible. But yes, I do think this is a bear flag, right? And if you're talking about the flagpole for this thing, I mean, you're pretty much talking about a crash, right? If we measure the flagpole for this, which I think this is pretty much invalid. I mean, I've never seen something like this play out. We'll have to wait and see. I guess I have. COVID was something that did play out. But if you're talking about like the measurement of this thing, you're talking about a move all the way to 400. So I don't know. I don't know if that's going to happen. That's way too far out for me to even think about. So we'll have to wait and see. But yeah, you can argue that this is a bear flag. Again, there are some bullish signs on the smaller time frames, but there are bearish signs on the much bigger time frames, such as the weekly time frame. So you want to be careful here. Now, what's important to note here as well, right? There's a lot of things you got to keep in mind here, right? You have an evening star pattern all the way over here. Now, you're probably wondering why that's relevant. Well, we always talk about where bears are, right? Evening star patterns are extremely rare on the weekly time frame. Like, I would say they're extremely rare pretty much everywhere. But when they play out really, really bad. And bears show up. They absolutely show up here, right? So if we do pump towards the upside, right, for whatever reason, let's say we manage to break through all of this resistance. We got supply and demand zone, a trend, 50 SMA. We just managed to break through all of this, right? I do think bears are going to step in at around between 490 and 500. I don't see a world where we're going to head much higher than 500 on the triple Qs. I think if this happens before April, I think it will be a blessing, and I would definitely be looking to short, right? Obviously, you want more confirmation. You just don't want to wait till 500 to just start shorting right away. You want confirmation. But that's what I imagine is going to happen if we just so happen to get, as everybody would say, a rip your face off rally or a pump towards the upside, whatever the case may be. All right. So that's what I'm looking at for the triple Qs when it comes to upside. Ideally, you want to see us break above well, stay above 480. Not only stay above 480, but if we're talking about some real upside, right? And the reason why I say real is because anytime we get upside, it gets taken away, right? If we want to see real upside, I want to see a break retest of this level right here, or this trend right here, this weekly trend that we marked out at 485, 486, and then from there we'll have to see what happens. We fill this gap and possibly, you know, consolidate here, or we just head higher. And highest again I'm looking at is about 500. I don't think we're going to head much higher than that. I could be wrong. We'll have to wait and see. Okay, so that's what I'm looking at for the triple Qs. When it comes to upside, when it comes to downside, 479, you get below 479, you're heading towards 473 pretty fast. Okay, so from there you're pretty much breaking below this bear flag as well, so you definitely want to be careful, right? We can head much lower than 473 from there. If you get below the 470s, then the floodgates are open. Well, actually, if you get below 479, the floodgates open all over again to 468. The lowest we can be looking at is about 450 on the triple Qs, right? So that's what we're looking at for the triple Qs. All right, weekly time frame for the SPY. Okay, so SPY looks a little bit different, and you're kind of below the 50 SMA on the SPY as well, right? But when you mark the trend line on the SPY, you got a little space towards the upside. It's also important to note that you do have a gap that needs to get filled at around 475, not 475, sorry, 575. Now, what's important to note here, you have a top here and you have another top here. Crazy enough, the neckline for the top, the double top, right, is at 475, between 473. I keep saying 4, sorry, 573, 575. I'm still stuck on the triple Qs. All right, so I wouldn't be surprised we reject from here, right? If we just, you know, hit 575, 573 and then reject from here, is very much possible, guys. Right? So again, this is why it's really hard for me to be bullish, because we're looking, I mean, clear as day, this is a double top, right? You have a clean neckline at 574, I mean 573, between 573 575. Very clean, right? You go to the daily time frame and you can see yourself, not only have we been rejecting the 200 MA on the SPY, but we've been somewhat rejecting, you know, the neckline for the double top here, right? Clear as day. And you see here that bears are very much present, right? They keep trying to push the SPY further down. You see all these bearish wicks here. Let me see if this is a flag, right? So I'm gonna try to map this out. If it's not a flag, then I'm not going to force it, right? But just want to make sure that triple Qs and SPY aren't showing the same thing. So yeah, you do have a rising wedge pattern here as well. And right now you're retesting the bottom of this rising wedge pattern. So yeah, it's not looking too good. I will say that much, right? And honestly, like I said in the last video, I didn't say this in the last video, but I did say this a couple videos, that I wouldn't be surprised after OPEX, the market pumps towards the upside. But again, we don't really have incentive to pump, right? We don't really have much of an incentive to rally towards the upside. I know we're talking about Jerome Powell, rate cuts, and all that fun stuff, but if we were going to pump based off that, we would have been done it. At least in my opinion, I think we would have been started doing it, or at least like really start breaking key levels. But maybe it's too early to speak. We'll have to wait and see. But when we're looking at the SPY, your key level still remains the same. 564, 565 is your psych level. You break above that, you're obviously heading back towards 570, and we obviously seen what happened every time we hit 570. You get above 570 convincingly and actually hold, then you're looking at a move towards 575, which is your gap fill right here. Now, if we're talking about downside, let's say we reject from here, right, and we manage to break back below 564 all over again, then we're heading towards 559. You break below 559 right here where these guys are in this area right here, then obviously you're going to be very illiquid towards the downside, and you're looking at a move towards the 550s, 540s. All right, so that's what I'm looking at for the SPY. All right, so let's talk about Nvidia, the semiconductors. So when we're looking at Nvidia, let's go to the daily time frame here. You have a death cross. You have the 50 SMA crossing below the 200 MA. It's a very bad sign. Very bad sign. Now, in case you're new to this channel, you're like, what the heck is a death cross, right? If we go back in time to the last time Nvidia had a death cross, this is pretty much what happened, right? You just absolutely tanked, and this was a 50% drop, guys. 50% drop. Now, I don't know if Nvidia is going to drop 50% based off this death cross. What I will say is that I still have a target of 100. I still think that target is very much possible. When that happens, I can't say for sure. I do imagine by April at least. But ultimately, yeah, this isn't a good sign, okay, at all. So we have a death cross on Nvidia. We have a death cross on semiconductor ETFs. Again, not a good sign. What's also important to note here is that you have broken or you're holding below 118. If you were paying attention Friday, 118 was pretty tough. Like bulls were really holding 118, right? So if you manage to break further down on Nvidia, you're looking at some pretty decent downside. You stay below 118, you open the floodgates towards 113, you break below 113, 110 is your strike level, and then from there it gets pretty liquid and you can head right back down to 103. You manage to break below 103, you open the floodgates all over again to 90, between 92 94. So you don't want to see that if you're bullish on semiconductors, right? Again, you have a death cross here, right? I don't make this stuff up, guys. But not only that, if you're going a daily time frame, you bounced here, you bounced here, you bounced here, you broke down, you're retesting, or you did retest, and you're attempting to break down all over again. So you definitely want to be careful here. Okay, you really want to be careful. Again, this is why I've been preaching to you guys that it's hard for me to join the whole bullish scenario when you're watching semiconductors tank. And maybe they're not, you don't even have to say tank, they're just not doing anything, right? When you're watching, one of the biggest AI giants out there, Nvidia, not move with the market while the market is moving to the upside, or I should just say the triple Qs is moving to the upside, that's concerning, right? That's not something I want to be bullish on. That I like I said, the last three trades we entered, we took profit like immediately, almost immediately, because I just can't trust this, right? Can't trust this at all. So you guys let me know what you think. But ultimately, I just can't get along with us being bullish just yet until I see semiconductors have some type of follow through. Like I said in one video, one guy was in SMH calls. He took profit. He was at 100% profit. And he asked me, should he take profit? And I said, yes, hurry up and take profit. And like 30 minutes later, SMH tanks, right? Gives up most of his move back, right? So you don't want to be that guy in this type of market. It's a very volatile market. It's not fast moves, but the market keeps blessing you with opportunities to take profit when you can. So definitely want to take advantage of that. But when it comes to Nvidia, you're looking at the weekly time frame here. I mean, clear as day, guys. Again, bounced here, you bounced here, you bounced here, you're broke down, you retest. Yeah, not looking good. If this continues, right? Because we have bear stepping in at this retest, right? I mean, you can easily see a move further down, and you're very illiquid towards the downside when it comes to Nvidia. You're looking at a move towards about 94, between 94 and 92, right where these guys are. So right about here, right? Somewhere in this range. So I do imagine once Nvidia does hit 92, bulls are going to step in. Like they're going to step in very aggressive. I have no doubts about that. But right now, it's really hard for me to get on this train right here. I just can't, guys. All right. If you buy calls here on Nvidia at below 118, you're just signing up for the best Diddy party of your life. That's what I feel like you're doing at this point. You may get lucky. I don't know, right? But this does not, I mean, one, this does not scream buy for me personally, right? I mean, you're just asking for the worst, right? You're asking this is like going over your friend's house, and you're like, "Hey, does your dog bite?" And he tells you no, and then you pet the dog bites your hand off. You pass out from shock because you're bleeding out, and then you just wake up at a Diddy party. That's what I. This is just terrible. Okay, this is just terrible. Okay, so I'm not looking to buy into death crosses. I'm not. Okay, because historically they turn out very bad. All right, so I think I made my point there with NVIDIA. Let's look at the VIX, and then of course we're going to look at what institutions are doing. So when it comes to the VIX is in a very interesting spot. So one, you have a reversal hammer pattern here, so kind of scary. What I will say is that you're back below this weekly trend. So a decent sign. What I will say as well that you are sitting on top of support as well. So let's go to the weekly time frame because I do believe I saw something. And mind you, I don't buy this move at all. I think the VIX is going to go like ballistic back towards the upside. But what I will say is that the market does decide to pump, right? And the VIX heads further down. I think the VIX is going to do one of these moves. I think the VIX is going to head towards this trend line right here, and it might be a little bit off, but somewhere between 17 and 15, we know what happens when you get around 15 and 14, and then boom, you're about to lose your pants. Okay, it's actually this trend right here. There we go. All right, so I think the VIX is going. If the VIX continues to head further down, I think this is where the VIX is going to go at around 17, between 17 and 15. And remember, every time the VIX gets between 15 to 14, what happens? You already know. All right, so that's what I'm looking at when it comes to the VIX. Now, I don't know if the VIX is going to continue to head further down from here because again, I just don't see an incentive for the market to pump. Does the market need to pump as far as a relief rally? Absolutely. But right now, I just don't see a reason for it to happen. But we'll see. Okay. But right now, if the VIX manages to get back above 21, yeah, and actually hold above 21 and close above 21, you got a bad sign. Okay, that's a very bad sign. We go to we are on a weekly time frame. Let's zoom out so you guys can see where this trend line is coming from. Like I said before, in case you're new to this channel, right? Every time you got above this weekly trend line right here, you reclaimed it, right? Even when you headed all the way as high as about 65 right here, bear stepped in, boom, you got right back below the trend line here as well. This is the first time you've broken above this VIX trend line, right? I personally think, I don't think this move is over. I don't think the VIX broke out of here just to make this small move. I think something worse is about to happen, right? So that's what I'm looking at for the VIX. You guys let me know what you think about it in the comments below. I know a lot of you don't believe in the VIX, but for the OGs, you've seen how the VIX plays out for us, right? So let's actually, what is this? We're already on the VIX here. Yeah, that doesn't tell me anything. All right, so let's look at what institutions did Friday. So Friday at close, and I changed my filters up a bit, so so it's gonna look a little bit different. I'm gonna change them back. I just wanted to test out a few things, but at close, we saw institutions load up SPY 536 puts. Now, not only did they load up, but they did sell some of these positions, right? So, March 21st, they were loaded up at 4:02 Eastern time. Yes, you could trade the SPY 15 minutes after close, depending on your broker. SPY April 17th is the expiration. 536 is the strike, and then you got them at the ass. So then they were loaded up at 564.50. So they're somewhat in profit, right? The SPY did close a little bit below this on Friday, so we'll see, right? And then you see the quantity, they were loaded up at the ass, so that means they bought these positions, and then you zoom over and you see the premium is like 3.5 million, 2 million, so on and so forth. Now, like I said, some of these are at the bid, so they did sell some of these positions. So this right here, they sold this one right here, and then you got more that were sold down here as well. But ultimately, it seems like they bought more of these positions than sold, so we'll have to wait and see what happens. Let's see what this spike is right here. This is 540 strike, and then you got 586 calls, both at the ask. So not yeah, so 540 puts, and then you got 586 calls for April 30th, 2025, and both of these were at the ask. This one's at 7 million. The puts are at 7 million. So this kind of tells me that we may dump before we pump. I don't know, right? And then these are at 600K. So something to pay attention to, something to think about. So we'll see what happens. But ultimately, that's what institutions are doing when it comes to the SPY. This upcoming trading week or the next few upcoming trading weeks, we'll have to wait and see what happens. Hopefully, you guys got something out of this. I don't feel like I gave a clear direction on where we can go. And honestly, I'm just like again, I'm sitting neutral right now. Okay, I'm really sitting neutral. And the reason why I'm being neutral, maybe I know I've disappointed a lot of you with that term, but the reason why I'm sitting neutral is just where we are on a weekly time frame for the triple Qs, right? There's no reason to be really bullish. If anything, I would be more bearish just given where we are. Not only that, but you're forming these bear flags on the smaller time frames as well, right? You got some good signs that we can pump a little bit more towards the upside, but ultimately, if this plays out, it can spell disaster, right? It can really spell disaster. So again, I'm not, I can't be bullish, guys. I'm sorry. I'm not signing up for that Diddy party. You do what you want. Maybe you'll make profit. I'm here for you guys. I want everybody to win in this market, even the trolls, even the ones that's mad at the world because they're losing regardless. Hopefully things get better for all of us. But let me know what you guys think in the comments below. Discord link is in the description below. If you want access to quant data, you want access to what institutions are doing, whether they're buying, whether they're selling their positions, dark pool levels, gamma exposure, all that fun stuff, feel free to check out the quant data link in the description below. You guys ask me all the time, do I think it's worth it? I absolutely do. That's not me being biased. I'm not sponsored by them or anything like that. I probably should with the amount of times I keep promoting them, but ultimately, you guys do what you want. I always provide this information in the Discord. So yeah, until the next video, traders, have a good one.